my co-host here today.
And I'm Stacy Chevalier, State Manager for Loan Depot, and I'm with Keith. Did it right this
Nice.
time.
Yes, you got it
Nice.
right. We're getting
Yes.
better with the arm directions and all that good stuff. But um, hey, before we jump into today's conversation about forbearance, I wanted to follow up on a little challenge that we had last week and our food drive challenge. So Stacy, take it away.
Yeah, so last week we challenged you for every interaction, view, etc., that we had with our very first episode that we would be donating that amount of money to our local food banks in Washington State. So last week we received 330 interactions, and so we will be donating. Keith and I will be donating $330 to our local food banks. If you want to join in the challenge, please let us know, and we'll be doing the same for this week.
Yeah, share, like, comment, get people involved. We want to just really turn real estate now into a resource for y'all out, whether you're a homeowner, a home buyer, real estate agent, builder, what have you, tied to the home community that you help as this share it and get it bigger. So really hoping to spread the word. So we've got a really awesome, really loaded question topic today as far as one of the most popular words in the mortgage industry. But before we forbearance, I want to share some good news with everybody and look at mortgage rates. Right, mortgage the trend is still reaching all-time lows. This is the Freddie Mac survey. They survey mortgage companies throughout the United States every week and look at where we are now. We're back down here to historic lows. So the great news out there in the world of mortgage and real estate are rates are staying to a lot of relief efforts done by the Reserve. Excited to continue to help that are buying houses that are looking to maybe look at alternatives to forbearance, get into a really awesome rate when it comes to a mortgage here in today's market. So here we go. Forbearance,
Yeah.
Stacey. Where should we start?
Well, let's start with, I think, just a few more. Do you want to talk about? I think we should talk about where we're at. So, forbearance, we now believe about 7% of homeowners are actually in forbearance.
Yeah,
Those
yeah.
are some statistics from the MBA.
Yeah. So this is only through the end of, I want to say, the 10th of April. So that number in the last week and a half has definitely gone up.
So something Keith and I really want to do with this on this particular topic is be sure that we show you where we're getting the information from and direct you back to those sources. There's a lot of misinformation out there, and we just want to make sure that we're really careful with how we're presenting this topic and making sure you know where you can go to do your own education on this.
Yep, absolutely. Because as the industry is evolving and the COVID-19 relief continues to evolve and get better for consumers in the nation, this will continue to be an evolving process. I was looking and doing some research. This is the Google Trends on forbearance as far as search terms. And coming into the end of March, forbearance wasn't even on the radar, but it's got really popular over the last week and a half, 2 weeks. Um, so we also want to, before we jump into the CARES Act, we also want to ask you guys if you have any questions about forbearance. By all means, please use the comments. Let us know. We'll field them to the best of our abilities or point you in a direction where you should be able to obtain an answer. So
So I just want to circle back on the 7% forbearance for one topic, which goes into my thought of like, let's make sure we direct where the information is coming from. But there was on Barry Habib is someone that some of us follow in the industry, and he made a comment, and I don't know where he got this comment, but that Mark Calabria was expecting only 1% would go into forbearance, and now we're looking at 7%.
Yeah, that's a substantial increase. And Mark Calabria is the director of the FHFA, who is the governing body of Fannie Mae, Freddie Mac, FHA, VA, and USDA. So it's a very interesting topic. I saw that in his update yesterday too, Stacy. That was quite a interesting statistic. But
And
I
it
think
makes
the
you
new
wonder about the unemployment, what they were thinking unemployment would actually go to, because we're about to be at that 20% unemployment number.
Yeah, and today well, actually we went live right as the unemployment number for the previous week was being released. So I don't know what that number looks like right now, but I'm sure it's out there in the public making its rounds because it is Thursday, and Thursday is the day that we get the unemployment number. So we'll
And
have to
keep
check
in
that.
mind, yeah, and all these numbers lag,
Yeah, by a week.
by at least by a week. Yeah.
Yep. So going into the forbearance conversation, one thing that was passed was right here, the end of March, we saw the passing of the CARES Act. And the CARES Act stipulated for mortgage servicers that we have to grant forbearance in the COVID crisis that we're all taking part in. So as a result of that, the industry going into the crisis, we a set workout as far as what forbearance was, what options were to reinstate your mortgage, whether or not you would qualify for a repayment plan, and all that good stuff. With the passing of the CARES Act, it kind of changed the dynamic and how we as mortgage servicers have to provide forbearance. And it's all laid out there in the CARES Act. If you choose to read it, you can find that on any congressional website. So we have been playing catch up in a little bit of turning our servicing process around to help folks that have been affected and impacted by COVID-19. The first thing that I definitely want to say, and it's on the CFPB's website, it's on Fannie Mae, Freddie Mac, everybody's website. If in this time you're still able to make your mortgage payment, that is always number one, the best option to do. There's a huge group of us still out there that are able to pivot our working situation, and we're able to still have our paychecks and make our mortgage payments. That is the best way to go about it if you can during this time. On the flip side of that coin, there are millions of Americans that have been impacted. To your point, Stacey, the 20% employment that we're looking at, that's what this is really here to help those folks that have been impacted, whether it's employment, furloughed, whether you actually got sick during this crisis, you can have options to help you with your mortgage financing. So I think we all want to keep as many Americans in their house as possible. So
Yeah.
it's an
Forbearance is not more forgiveness, right? So that's why it's important to, if you can make your payment, to make it.
Absolutely. When we passed the CARES Act at the end of March, there was a whole probably week's worth of news cycles that went through that. Oh, it's a mortgage holiday. It's a mortgage holiday. Don't worry about paying your mortgage. It's fine. Um, During forbearance periods, it suspends or it makes smaller your mortgage payment depending on the forbearance that you get. It the mortgage is
Essentially
still
freezes it.
yeah, it just freezes it. It's the mortgage is still accruing interest during the forbearance period. So it's still piling on that interest. You are also still during your forbearance period required to pay your taxes and your hazard insurance, your homeowner's insurance portion of your mortgage to your mortgage servicer during this time. So a lot of us out there with mortgages, we have those accounts tied to our mortgage statement. So you still have to remit those during the forbearance agreement. So super, super important people realize that small detail as well. Um, One other great detail to point out is not all mortgages are created equal and fall under the umbrella of FHFA, right? So the Federal Housing Finance Administration, they govern, like I said, Fannie Mae, Freddie Mac, FHA, VA, USDA. So there's a group of mortgage borrowers out there, especially here in the Pacific Northwest, with our prices being so high that are in the jumbo market. So they're over that high balance of $741,000, and they have to work with their individual servicers on a one-off. It's not a guarantee that they're going to get it, though. Mark Class have pushed hard in the media to ask servicers that fall outside FHFA's guidance to also pick up the same uh, pick up the same torch when it comes to forbearance and allow those things to happen in accordance with the CARES Act.
I think it's important to not just those ones that fall outside of FHFA to, if you're in the situation and you have questions, the best place really to go always is to the servicer and get that information directly from them. It's changing. It's going to change again from the time Keith and I are done talking. And so the information we provide is going to be outdated, which is why we really want to just keep directing you back to the educational resources. But please call your servicer. That's the number one best place to go if you need help.
So that's a great point. And just to put some color behind that, I was looking at Fannie Mae's request to servicers. Uh, since the passing of the CARES Act, they've updated the servicer letter, the underwriter letter, like 5 times. It's been updated every single week as this continues to evolve. And there's a lot of details that have to be ironed out to make sure that everybody's getting a really good deal in this situation. So,
yeah, and I think this is just my own personal color on this.
yeah,
It's not from a source, but this rolled out so quickly, which was good because the people out there that needed the help needed it instantly. We couldn't wait, 4, 6, 8 weeks as they figured out all these details. So that's why I believe it rolled so quickly with no requirement to verify if you need the forbearance relief. You just call and
yeah.
and ask for it, and it's available to anybody. But it was speed. It was speed to market, which has caused where we're at now, where it just keeps changing.
Right. And so to figure out, getting back on, like, am I part of FHFA or am I not FHFA? Like Stacy said, the number one thing that you can do is call your servicer. There is zero recourse your mortgage company is going to have if you call them up and just talk about forbearance, right? That it's awesome to understand your options. You just call them up, hey, I need to know what forbearance looks like in this situation. Other resources that you guys can take a look. Here is a website that Fannie Mae has for consumers to look up their mortgage options. Same with Freddie Mac. Freddie Mac has one too. So if you want to know if your loan is currently owned by Fannie Mae or Freddie Mac, go ahead and pause. You can rewind and pause those and
And
go to
why,
those
Keith, would a
URLs.
consumer want to know if they're Freddie or Fannie?
The consumers would want to know if they're Freddie, Fannie, or fall under the umbrella of FHFA, because those borrowers can call their servicers, and those servicers, by law and in effect of the CARES Act, will have to extend forbearance in this current situation. So that's why it's important to know whether you're Fannie, Freddie. If you're looking for FHA, you would need to call your servicer. FHA also has some really good resources for you as a mortgagee, excuse me, as the homeowner. If you have any questions about forbearance and what they're doing, they're taking a completely different situation and a completely different look at forbearance options. So Fannie, Freddie are one bucket, FHA is a different bucket, and the VA and USD are also working it out. So it's super important to go straight to the source and ask the questions of your servicer. Hey, what does this look like for me in my situation? And as always, we have information here at Loan Depot for you. We may or may not be your servicer. If you are your servicer, we'd love to help you. If we're not your servicer, do yourself a favor and call your servicer. Look at their website. Be very careful of websites to give you too much guidance, because in the end, the contract and the advice that you need to come from your servicer, the ones that you're in with.
Yeah, you're cutting out just a little bit, Keith, but let's jump into just what consumers can look out for as far as fraud, which has increased dramatically during this time.
Yeah. So, well, we're seeing a lot of different things. I mean, scammers never miss a beat when it comes to a crisis to try to take people's money, and it's a sad reality. But this is where interaction with your servicer is even more important. If you're getting calls, if you're getting emails, if you're getting anything that's not coming directly from your mortgage servicer, there's a high likelihood that that's a scam. the best way to get a hold of your servicer is look at your mortgage note. Take a look at it. They've got a 1-800 number on there. Every one of us has to have that. So contact your servicer directly and verify your options. One very, very big key part of this is no one is going to ask you for money to get a forbearance, right? There's no charges to set up a forbearance agreement. The servicer's not going to say, oh yeah, we can set up a forbearance agreement for $299. I just need your credit card, social security number, and your zip code. There's no fees involved with setting up a forbearance agreement. So that's a huge
Yeah.
red flag number one. Another resource that you can go to that we share with our folks. Did I just add that to the stream? There we go. PreventLoanScams.org. They're a nonprofit watchdog that helps. And this is not just for mortgages. This is for loans in general. If you think that you are being scammed on a credit basis, whether it's a mortgage, credit card, any kind of credit-related product, you can definitely check them out online and talk to a nonprofit counselor, credit counselor there, and see how they can help you resolve any scam that you may be subject to. So
yeah, and we have an FAQ on our website if you want more information on just not making payments to a third party, not paying someone who promises that they can get you into foreclosure or forbearance or out of it. It'd be really, oh, there it is. Yeah.
Yep, there it is. So yeah, again, the biggest, quickest red flags is if anybody's asking for a fee in advance, it's a scam. If there's any foreclosure guarantees that, hey, we're going to stop foreclosure, and they're guaranteeing anything of that nature, it's a scam. Everybody is very good natured in the mortgage industry. In my 20 years of being here, and we're in business of helping people attain home ownership, not scamming them out of it. So just make sure that you're aware that we're never going to ask for money up front, anything. So I think that's the biggest red flag. And there's plenty of resources to help you through that. What else do we need to know about forbearances? Forbearance, there was a lot of talk in this last week that forbearance isn't going to require you to come into a one lump sum. And I want to put some color behind that. Forbearance option number one, when you come out of forbearance, you're going to have to pay the money back, right? The money has been kind of floated for you for that 3 months, 6 months. Per the CARES Act, the maximum forbearance can be up to 12 months or 120 days after the national emergency has been declared no longer an emergency. But yeah.
Can you turn your mic up just a little bit? Someone messaged me. Thanks.
I can do that. How does that sound? Does that sound good? Good. Sorry about this is my first week with my new mic. I literally last night at about 4:30. So I'm still trying to set the levels on it. So I know I need to turn my mic all the way up. So I appreciate that on the comments. So the one thing is we got to figure out how we're paying that mortgage back and getting it back in a reinstated position. And the number one way to do that is paying the lump sum that you missed. Some folks won't have the cash sitting around. So there's been repayment options that are put forth, as well as loan modifications put forth that loan servicers are ready to work with you on. And
So
that
that-
FHFA.
So that lump sum, to go back to that really quick, that would be if you freeze for the first 3 months.
Right.
And that's what the agreement upon time is. That fourth month you owe all 3 months plus the fourth month.
Correct.
Okay. That's the lump sum.
Yeah,
option.
exactly. And there's a really cool calculator that I wanted to share with everybody that I found on Fannie Mae's website. It's called the repayment calculator. And the repayment calculator is super awesome because it shows you if you are eligible for a monthly payment repayment plan. Let's say you have a $2,750 mortgage payment, just to use a number, and you're going to go 3 months past due. And then it says the number of months that you're going to repay is you're going to go on a 6-month repayment plan. It's going to show you what your new mortgage payment to get all caught up is. it says your new temporary mortgage payment will be $4,125. So it really helps you, the homeowner, understand what that will look like coming down the road once your forbearance agreement is over. So you could change that number however you please. But
check with your servicer to make sure it's an option. But that's a good resource.
If you're eligible for the repayment option, it's definitely a cool little calculator. All questions that you can ask your servicer as you go into the forbearance agreement. They are going to mail you out information. So the process is make the request, they're going to mail you out information, and then you're going to confirm the request. So it's a really interesting time in the mortgage industry to see how the forbearance plays out in the next 6 months. But it's a great option for those of you in states like Washington State. Here we are. We're still slowly, per Governor Inslee's turning of the dial metaphor that he continues to reference yesterday in his conference, stating that they're going to kick out the stay-at-home order until later into May, late May, but they're going to start opening up things here week by week. It's going to take time to get all these 20% of Americans back to work. So it's awesome that these opportunities are there for people.
Agreed. So, I think that's a good high-level overview. I don't know if you have anything else you wanted to share.
Yeah, I'm scrolling through the comments really quick. Yeah, we're very happy to bring this information to you folks. If you do have questions, let us know. There's no questions in the feed. Everybody's super grateful that we're having this conversation. So a couple websites to just remember to go to. FHFA's website, Federal Housing Finance Administration, Fannie Mae, Freddie Mac, FHA, VA's websites. Go to their websites. Go to your servicer's website and find out information from them. The news media is a great place to find awareness, but we all have a due diligence to take it one step further and go interact with our individual mortgage servicers and the folks that are. Hey, sorry about that. My dog, her name is Winter. But interact with our mortgage servicers and get the true understanding of what's going on in our industry and what's going on with your mortgage. All these entities are out there with great information. And another place to find information is also the CFPB, the Consumer Financial Protection Bureau. So
yeah, and if you have personal questions related, to you, feel free to reach out to Keith or I, and we can walk you through in much more detail additional information on this topic.
Yeah, I'm going to go out there with Shirley and reiterate, this is really important information to share and understand during this pandemic. And please do share this as a resource, because we want to point you guys in the right direction to make sure that there's no surprises, that you understand what forbearance looks like for your particular situation, that when we're all said and done on this, we can get back to paying our mortgages on time. We can continue on with our life and building wealth through real estate. So, well, I think there's no further questions, and we covered the topics that we wanted to cover today. So, give us a little shot in what we're going to talk about next week, Stacy.
Next week, construction got partially turned back on. Yay! That's super exciting. My background is in builder, for those of you that know me. So, super happy for all my builder friends. So we're going to be talking about that and have some special guests on.
I cannot tell you how awesome it was. The last yesterday, I had to drive down to the grocery store, and there's a couple residential housing projects that are going on. One's an apartment complex, and the other one is a single family residence, and they're both back under construction. And I'll tell you this: there was on the apartment complex, I think I counted 3 people on the whole job site while I was sitting at the light. So they're definitely aware of the social distancing, and I'm just glad to see us building again, because people are still moving to Seattle, still moving to the greater Tri-County area. So we need more housing. Super important for affordability.
Yep. So agreed. Well, thanks everybody. Thank you, Keith.
Yeah, thank you, Stacy, and we'll see you guys next Thursday at 10 a.m. And please like, share, and spread the good word. Have a great week.